This article says, and I quote, pulling up this chart, you can see that in September, prices were 696,000, October 697. Now, investors, this is a big deal. The city recently introduced a new zoning called HGO. What it allows is Calgary real estate may be changing pace, which may be a relief for buyers and not as favorable for sellers. In today's real estate market update, I'm going to share with you what our LiveInnerCity real estate team saw on the ground, what buyers and sellers need to know in this market, how to hedge your cash and your investments against inflation. And this, by the way, is by Robert Kiyosaki. Rezoning the city of Calgary is proposing, and trust me, this is going to be a big impact on investors, pricing on the Calgary housing market, and predicting mortgage rates. Now, last market update, I did talk about how to predict mortgage rates, but this time I'm gonna go a little bit deeper, okay? And this is gonna be at the end. So this caught my attention. This is an article from Robert Kiyosaki, famous author of Rich Dad, Poor Dad. And he says, America is bankrupt, going through a debt crisis and high inflation, and what he is investing in to protect his wealth. One of those things is real estate. This article says, and I quote, he recently claimed to own 15,000 houses, which he leverages as an effective hedge against inflation. Historical data from the Federal Reserve Bank of St. Louis shows that while the consumer price index has risen by 896% since 1963, the median sales price of homes has increased by 2,353% and rent by 892%. This indicates that real estate not only keeps pace with inflation, but can also exceed it. So maybe instead of investing in crypto and losing all your net worth, like me, real estate is a stable, predictable, and sound investment. Now, not investment advice, I just wanted to share a different perspective by people smarter than me because, I don't own 15,000 homes. So the Calgary real estate market. Now, overall, compared to last month, we feel like pricing has kind of hit a ceiling or is pretty close to. Not that it's not increasing still, but we feel like it is slowing down. It does feel like there's a lot lower inventory than ever before, and deals have slowed down, but they're still happening. For sellers, in terms of offers, you're just not getting as many offers or as dramatic offers as possible. We feel like we are turning the corner on the price ceiling. But, if you had like a $500,000 property and you listed it at $475,000, you will probably still get multiple offers. Now for pricing, we are advising our clients to price it slightly above market value, but still within striking distance of getting offers. Now, every community is going to be different, but if you wanted to know what that striking distance is, give us a call if you want to leverage our expertise to sell your home. You can contact us in the description below. For buyers, you still don't have a ton of time. Urgency is still important. Now, you may still be competing, but it's not going to be as crazy in terms of the number of offers and pricing. Now, before, like a month ago, we would be writing offers beyond market value. Today, it's a little bit more balanced, meaning we are writing offers based on what similar properties have sold for in the last month. So the swings, they're just not that high. As an example, sellers are a little bit more open. So for detached homes, we recently made an offer on a detached home that was only $10,000 more. And that was really based on the values based on past sales, and it was listed at market value. Normally, sellers would wait a few days even if they received an offer on the first day, because they would know with a pretty high level of certainty that they would get more offers and probably a higher price. Now they're open to accepting the first offer, even if it's on the first day. Another example of sellers being open is that during negotiations for an inspection, we negotiated $3,000 off the list price because of some issues. Before, you wouldn't be able to do that because the seller would have told you to go pound sand because there were a lot of other offers that they could choose from. So sellers are being a little bit more reasonable these days. Now, investors, this is a big deal. the city recently introduced a new zoning called HGO. What it allows is, instead of only having townhomes on corner lots in the inner city, they are now allowing for inside lots in the middle of the street that are not corner lots to also build townhomes or row housing. So the city of Calgary is proposing to do a blanket rezoning of properties in the city center to allow for higher density. So as an example, me and a few buddies, we are looking to purchase a lot in the inner city with an older home. We're planning on demolishing that, and then we're gonna build 4 townhomes, each with their own individual legal basement suites. So that one property can now be turned into 8 units. Now, this is a $3 million project, and we're planning on doing this because we want to supplement our retirement when we're old, wrinkly, and wearing diapers. Now, I do plan on document this journey on our YouTube channel, so feel free to subscribe if you want to follow along. I'm going to share our wins and also our because that's going to save you a lot of energy and money. And if you're interested in doing this, but you don't have the time or you're not in Calgary, then we will probably open this up for joint venture partners. So if you want to be a joint venture partner, then contact us in the description below. By the way, if you're new to this channel, my name is Felix Chan, Calgary realtor and mortgage broker with the LiveInnerCity real estate team powered by Real Broker, the best brokerage in the world. This is a reminder that I'll also be talking about predicting mortgage rates at the end of the video, so make sure you stick around for that. So now let's dive into Calgary real estate prices. Detached homes. Okay, so for benchmark prices for Calgary detached homes, they've pretty much stayed the same compared to the last few months, floating in the 690s. Pulling up this chart, you can see that in September, prices were $696,000, October $697,000, and November $699,000. Now, we've stayed pretty steady in the 690s from the last 5 months. And even though we've been edging a little bit higher, we've been staying within a $10,000 range. So comparing the $10,000 to $700,000, I would argue that prices are virtually flat. Have we peaked? Is this the correction? Are we going to break through $700,000 next month? Only time will tell. And now remember that the last 2 years, our spring market came in January. Will that happen again this year? And let me remind you, in January, we started our benchmark prices at $623,000. So that's up about 11% year to date. This is a monthly graph of the Calgary detached homes from November of last year until this month. Now you can see that we've been holding steady for the last 5 months. The green bar represents sales, so it is declining, but we are at the same level as last year in November. If you owned a detached home in Calgary and you're interested in selling it, in September it would have taken you 25 days, October 27, and November 32. Now, pricing is rounding off and stabilizing with longer days on the market, but the amount of inventory might keep prices around the same price range for the near future. Semi-detached homes. Benchmark prices for Calgary semi-detached homes have stayed the same. Pulling up this chart, you can see that in September it was $621,000, October $628,000, and November $628,000 as well. The last 4 months, they've been in the 620s. Now, this monthly graph of Calgary detached homes from November of last year until this month, you can see that by the red line, which is the benchmark pricing, we are virtually flat. If you had a semi-detached home and you wanted to sell, in September it would have taken you 26 days, October 25, and November 28. It is virtually the same. I mean, it is lagging by a few days compared to the last few months, but this is not a crazy spread. Townhomes. Last month, townhomes in Calgary were on fire. This month, no different. This was another record-breaking month for the highest price this year. In September, it was $419, October $425, and November $429. If you take a look at this graph, it seems like it's been on a pretty steady incline, but this graph is kind of catfishing you. In January of this year, benchmark prices were at $356,000. Today, it's at $429, a $73,000 increase. If you wanted to sell your townhome, you're in a pretty good position. With the exception of January and February this year, which would have taken you 30 plus days, the average days on market starting in March until this month fluctuated between 19 and 23 days. So it's been pretty tight. In September, it would have taken you 21 days, October 23 days, and November 22. For apartments, it's the same story with Calgary condos as it is with townhomes. Prices have hit another record high this year. In September, it was $312,000, October $316, and November $320. As you can see from this graph, again, from November last year to November this year, the green bar represents the sales, which is noticeably higher than it was in November of last year. The red line, which is the pricing, that's headed for the moon. If you wanted to sell your Calgary condo, you're in a pretty good position. In September is 28 days, October 29, and November 29. How to predict fixed mortgage rates. Now, I did talk about in the last market update. I'm not going to go through it all in detail. I would recommend you go watch that. However, on a high level, fixed mortgage rates are closely correlated to the Canadian bond yields. Okay. Now, I wanted to clarify a few things with 4 main points. Number 1, the yields change on an hourly and daily basis. Fixed rates are not identical to changing in real time. Number 2, fixed rates by lenders change based on the trends. So if you see a continual trend, maybe over a few weeks, then you can expect that lenders will change their rates, whether it's up or down. Number 3, the spread. Now, the spread between bond yields and fixed rates is anywhere from 1 to 2%. So as an example, if today's yields are around 3.5%, fixed rates, you can assume to be around 4.5 to 5.5%. Right now, it's a little bit higher than that, but that's a general rule of thumb you can follow. Lenders typically want a 2% margin for profits, and the spreads are going to be pretty similar across all terms, whether you're looking at a 1-year term, a 3-year, or a 5-year term. And number 4, if there is a huge dip or a massive increase, lenders will adjust a little bit quicker. Now, as a general rule of thumb, a lot of people just watch the 5-year bond yields. Guys, was this helpful? If it was, I would love your support by taking a few seconds and liking this video. And feel free to subscribe if you want more content like this. If you're a real estate agent watching this and you want mentorship, or you're feeling stuck and want to level up with a top producing real estate team like ours, then shoot me a DM on Instagram at felixchan.me. Finally, let us know what other topics you want us to cover in the comments below. I actually read all of the comments, and we do take into consideration what you guys want. My name is Felix Chan, Calgary realtor and mortgage broker with the LiveInnerCity real estate team, powered by Real Broker, and we'll see you in the next video.